Imagine a world where the most powerful weapon isn't a missile, but a single delete key. Across the global financial grid, a silent execution is already taking place while you believe you are safe. The numbers glowing on your screen right now are not wealth, they are permissions, temporary digital claims, stored on machines owned by institutions that don't even know your name. This is not science fiction. This is how modern digital banking actually functions under current statutes. Welcome to the era of the liquidity trap. This is not the slow decay of a company. This is the light-speed evaporation of trust. In the next 12 minutes, we are going inside the cold, calculating logic of the system to show you how a lifetime of effort can become a 404 error overnight. Forget everything you think you know about banking. The gates are already closing. This is after decision, and the truth is no longer a choice. Ref BIS Annual Economic Report 2025. The financial audits of 2025 exposed something terrifying. We were told the system was built on rock, but it's floating on a sea of ghost liabilities. When you deposit your salary, it does not enter a vault, it enters a furnace. Your liquidity is instantly transformed into long-term illiquid bets, assets you never approved, risks you never agreed to carry. For every real dollar held in reserve, dozens of digital claims are created out of thin air. This is not a conspiracy. It's called fractional reserve modeling. But in 2025, the fraction has become a fiction. We traced over $500 billion through the system, only to discover it exists nowhere, except inside the imagination of a ledger. You are not a customer. You are a voluntary lender to a system that already spent your future before you earned it. This is not a lack of wealth, but an engineered difference in the velocity of access. Speed is the new executioner. In modern liquidity events, money doesn't flee in hours, it escapes in microseconds. While you wait for a news alert, autonomous trading algorithms have already sensed the shift in confidence. These are not human decisions. They do not panic. They do not hesitate. They do not feel loyalty to your savings. By the time you type your password, institutional capital has already exited through digital backdoors, channels you were never allowed to see. This is not unfairness. This is physics. Your perceived digital value is being harvested by machines that move at the speed of light. You are not slow, you are obsolete. In a system where the finish line moves before the race even starts, the predator doesn't wait for the prey to notice the trap. It simply closes the circuit. Ref. SEC Algorithmic Oversight Report 2025. They call it capital preservation, but to you, it feels like a lock clicking shut. New emergency directives allow for temporary stasis, a polite legal term for trapping liquidity when systemic panic spreads. Your app shows a technical issue, your card shows a connection error, but behind the polished interface, the exit has already been sealed. The system is not protecting you from collapse, it is protecting itself from you. Under many modern statutes, your assets are no longer yours. They are collateral for the institution's survival. The cage is soft, the bars are invisible, but the doors no longer open from the inside. This is the reality of deferred ownership. You own the asset, but they own the time. Ref. European Central Bank Crisis Management Framework. Every collapse creates two groups, those who lose everything and those who prepared for the shift. Meet the shadow architects. They do not fear instability, they structure around it. While headlines mourn lost savings, these funds activate complex instruments designed to benefit from extreme volatility. This is not evil in their eyes, it is incentive. A world where collapse is not a disaster, but a business model. They view your crisis as their entry point, hedging positions in a structure designed to monetize failure scenarios. You are not the victim of bad luck, you are the fuel for a very profitable fire. The math of ruin is their greatest asset. Never confuse their desperation for their duty. They have already moved their lifeboats while asking you to be the anchor. In a digitized financial ecosystem, no institution stands alone. Every bank, every fund, every market is connected by a counterparty chain. It is a web of hidden promises that spans the entire globe. When one link fails, trust does not degrade, it snaps. This is systemic contagion, a failure that moves faster than regulators, faster than headlines, faster than human response. It is the domino effect of the digital age. By the time the media name the first casualty, the infection has already reached the core of the global infrastructure. Confidence collapses quietly in the dark, and there is no vaccine for a system built entirely on belief. The pulse stops before you even know you are sick. Rep. IMF Global Financial Stability Report 2025. The rhetoric of the collapse is always the same. They will call for unity while they prepare for their private extraction. They will speak of national stability to justify freezing your life's work, turning your survival into a civic duty. This is the moral blackmail of the dying institution. They need your loyalty because it is the only thing keeping the ghost of the system alive. But look at the capital outflows from the very top. While they preach shared sacrifice on the news, the exits are crowded with elite wealth moving into hard sovereignty, assets that no central key can delete. They are asking you to be the anchor that holds the ship steady, while they have already boarded the lifeboats. Never confuse their desperation for your duty. Your compliance is their last remaining asset. Ref. Financial Times, Sovereign Wealth Flows 2025. Digital convenience is a trapdoor's finest cover. In the 2025 liquidity events, the exit isn't blocked by soldiers, it's blocked by bandwidth. When the order is given, the silent execution begins in the server rooms. Far from public eyes, artificial latency is introduced. Requests are queued into a digital infinity. While you refresh your browser with rising panic, institutional accounts are settled in a dark pool behind a separate, high-speed gate. Your technical frustration is not a bug, it is their calculated window to exit first. The system didn't break under pressure. It was simply reconfigured to save its owners while the doors were still open. You are clicking a button that has already been erased from the internal logic. This is the reality of a throttled sovereign. There is a legal reality you were never meant to understand until it was too late. It's called the bail-in. Under many modern 2025 statutes and specific legal frameworks, your deposits are no longer considered your property. Once you cross the bank's threshold, your cash becomes a legally unsecured loan to the institution. If the bank becomes insolvent, they have the legal right to convert your liquid cash into worthless equity. You go in as a saver. sticks, the truth is already scheduled.